What if there was a table inside a book written 150 years ago that could predict every stock market crash and boom before they happened? Sounds impossible, right? Yet, for over a century, it has been shockingly accurate. This isn't some modern Wall Street algorithm. It was published in 1875 by a farmer named Samuel Benner, who was desperate to understand why financial markets kept crashing. His theory: markets don't move randomly, they follow cycles, and if you could recognize those cycles, you could be on the right side of every market move. So, how does the Benner cycle work? And can it still predict the future today? Let's find out. In the late 1800s, Samuel Benner was a farmer who had lost everything during an economic downturn. He wasn't a banker, not a stock trader, just a man who wanted answers. So, he studied every financial crash and recovery in history and found a pattern. He divided market cycles into 3 types of years: panic years, stock market crashes, financial crises, mass sell-offs; boom years, high prices, good times, and the best time to sell; hard times, low prices, fear in the market, and the best time to buy before the next big cycle. And here's where it gets crazy. Benner's cycle predicted some of the biggest financial collapses decades before they happened. The Great Depression in 1929, Benner's cycle had it marked as a panic year. The housing crisis in 2008, also marked as a panic year. The COVID crash in 2020, just as predicted. But how could a 150-year-old chart be this accurate? Now, some might say this is just a coincidence, but when you compare Benner's predictions to real market cycles, the pattern is hard to ignore. It's not magic, it's human behaviour. Markets rise when people feel confident, and they crash when fear takes over. And because history repeats itself, these cycles happen over and over again. The Benner cycle follows this pattern, showing when investors are likely to panic and when markets are most overvalued. So, where are we now? Benner's cycle marked 2019 as a peak, predicting a downturn in the early 2020s, which is exactly what happened. And according to the cycle, the next major panic year is coming soon. So if Benner was right in the past, does that mean we can predict the next crash? Not exactly. Markets have evolved. We have crypto, tech stocks, AI-driven trading, things Benner could never have imagined. But the core principle remains the same. Markets move in cycles. When everyone is panicking, it's often the best time to buy. When everyone thinks prices will go up forever, it might be time to sell. Most investors lose money because they follow emotions, not cycles. But those who understand patterns, they're always one step ahead. So the real question is, will the Benner cycle be right again? No one can predict the future with 100% accuracy, but history, it leaves clues. Samuel Benner saw patterns in booms and busts that still play out today. So, is this a real cheat code for investing, or just another financial myth? Well, that's for you to decide. Because in the end, the best investors don't just watch the markets, they watch history.